Thank you all for coming, joining educational class today. My name is Patsy Chan. I'm from Real Property Management Fairmate, and I have a great honor to serve as the 2025 Educational Committee member. A few housekeeping class training starting. So if you have any cell phones, please silence them, and you need to answer the phones, please use the store. Thank you. We have 3 honorable guests today, all from Omni Bank, and each of them have very extensive banking experiences. Mr. Alex Hu, he will talk to us about SBA loans.
Yes.
And Mr. Eric Wu will talk to us about commercial real estate. And also Howard Lee will talk to about HELOC.
Yeah.
So if you have any questions, please hold and wait till the last of the session, and then walk up to the mic so that we can be recorded. So let's start.
Again, good morning, everyone. My name is Alex. Welcome here in this early morning. I've been working in the US for about 30 years, of course, previously in Taiwan, mostly in international trade, and also commercial real estate, SBA loan, etc. Yeah. Today, my topic will focus on the SBA loan. Okay. So I would like to do this way because the session is kind of short, and we have a 3 topic here. So maybe I just brief some SBA loans, the type of the loan, terms, condition, and then we leave some time for people to ask any particular question from you, because I do believe everyone has a different background, different experience. So maybe you have a different kind of the question or expectation, like to know about the SBA loan. Okay, so first of all, I like to say for SBA loan, usually there are lots of kind of SBA loan, but mostly related to us maybe just real estate. Okay, but in the fact, SBA we all know is about 7A 504, but in the fact, SBA still have not only the products, not only real estate, but also have equipment, line of credit, and also exporting with the LC supporting. So maybe like what you know or what you're bumping to, let's say about 12 years ago, lots of car exporters, they export a car to China. And this is also one of the SBA's guarantee program, but not everybody knows about it. And also they are also they related to the Exim Bank. If you export the scrap metal, medical instrument, in effect, they all belongs to SBA. Yeah. But again, if we talk about the SBA real estate related, okay, and this is what we like to know today, and most of people will use it. So let's start it from the SBA real estate. As we know, to qualify the SBA loan, first you has to be the domestic business entity or citizenship or green card, and the owner has to be at least 51% and above as the USA citizen or residents. Yeah. And again, the company has to be in the United States. And also SBA encourage the small business, they buy their own used warehouse. Okay, so this is very important point. The SBA, they don't encourage people to buy a investment property, like you buy an apartment to lease to earn the income, you buy a warehouse to lease, you buy a retail, okay? But again, if you buy a 4 units retail and you're gonna use one of it as your own restaurant or your office, and you can rent out the 3 to other people. But again, you have to fulfill 45% is used by your own. So this is another key point of the SBA requirement. Yeah. So for example, somebody I mentioned, he want to run a restaurant or office. However, the building he looking for is, wow, this one's kind of big. And for the warehouse or the office building, then you think, oh, maybe I'm going to use it in the future. Or the warehouse, I might need 10,000 square footage right now, but maybe my business will expand next 2 years or 3 years. Then you can rent out the rest 49% for the time being. And then to see when you're going to need to use the rest, you can take it back as owner used. Yeah, so this is another way you get approved on the SBA loan and use the SBA loan program. Owner used, and then domestic citizen or a green card holder. Ownership, yes. Yeah. So they don't, I don't want to say doesn't allow, but it doesn't encourage those foreigners to here and buy a property and then use as owner used, but it's a foreigner. Yes.
So I cannot have 50-50 then. My
No.
other partner has to be 49 and I take 51.
Yes.
Ah, okay.
Yeah. Yeah. So again, this is a 51-49% is very sensitive to the SBA qualification. Yeah. Okay. Okay, so this is the basic two requirement of the SBA loans. Okay, so then let's say the SBA real estate loan type. Again, we just say you could be the real estate or you could be the machine, etc. And owner use, we mentioned about it. Okay, so usually as a frontline people, I always explain to my clients whenever they say, hey, Alex, I need an SBA loan. At this moment, I will explain to them the difference from SBA loan with the conventional loan. Okay. And here there are 4 characteristics I would like to explain to them first, because everybody has different kind of deep pocket, they have a different kind of a cash flow. So I always started with first, how much down pay you want to put it, or how much down pay you can afford it. And then on the other hand, the lower down pay you put, how much payment, your cash flow reporting, you can afford it. Yeah, so it's related. So first of all, let's say SBA down pay, if you use a 7A, you can just put 15%, 1.5. And then you have to get a loan of 85%. And by doing, you put down the 15%, what does it mean? You don't have to idle your cash on the building. Then you can use your cash in other business, cash flow, buy inventory, payroll, whatever. Yeah. But as of a conventional loan, for today's day, if owner use, we talk about average about 30% down pay. So instead of 15%, you have to put another 15% to fulfill the down payment of the conventional loan. Yeah. So again, you have to idle your 50% cash into the property, but your payment will be less. So first of all, this is the difference of the down payment and also your debt service. Yeah. And secondly is let's say the rate. Usually the SBA, they require guarantee fee. And it's a little bit different calculation, depends on the amount and then the terms and conditions. But roughly, I would like to say it's about 2.75% of your loan amount. Okay, usually people will say 3%, but 3% is the loan itself, but not the guarantee portion. But more or less, we just take it as a 2.75. Okay, versus if you do a traditional conventional loan. Again, it's various, depends on the bank, but we can say it's about 50 basis point or 1%. So in here, your down pay is different, but your guarantee fee versus the loan fee, it's about more than 1% difference or 1.5%. And then the interest rate. SBA usually, if we talk about 7A, usually it's floating. And then the rate is usually started from prime +1, prime +2, or you can even see some bank, they offer prime plus 2.75%. But if conventional loan, again, depends on the relationship, the risk, loan to value, and probably the type. So it could be prime or prime plus 0.5% or even prime minus. So again, interest rate is different if you use the SBA loan versus the conventional loan. However, the good thing of SBA loan is that even you pay less, even you pay higher interest rate and the guarantee fee, but SBA loan is good for 25 years, for 30 years. In between, you don't have to renew the loan. As long as you pay, your performance agree, and you still own this property as your owner use, then every month you just pay the payment. Yeah. And versus the conventional loan, usually the long term is 5 years, 7 years, or 10 years due. Some people will confuse. Oh, it's not 30 years. No, it's 5. Long term is 5, 7, or 10 years, but amortized is 30 years. So this is two numbers usually confuse the borrower. Okay. And then it means that every 5, 7, 10 years, you have to renew the loan. You have to reapply again. And again, you have to pay the fee. So this is the most different for category between the SBA loan and conventional loan. So I usually ask the customer, based on the 4 category I just mentioned, which way you prefer. Yeah. And what's your cash flow planning, your business trend, etc. And you choose the one you feeling the most. Yeah. And another one, another one I'd like to mention, the SBA loan, the prepayment penalty, even though it's free, it's floating, but the prepayment penalty is about 5.31% for the first 3 years. Yeah. And normally conventional loan, most likely if you have a fixed rate, then you have the prepayment penalty. And the prepayment penalty decided by the bank, maybe 5, 4, 3, 2, 1, 5%, 4%, 3%, 2, 1, or 3, 2, 2, 1, 1, or only first 3 years. Again, it depends on the appetite of the bank. And some people will say, there's another kind of the SBA loan with lower down payment and fixed rate. Yes, there's another type of SBA is called 504. Yeah, 504 means that the down payment only 10%, and the bank take 50% of the loan, and SBA in the second position takes 40%. Yeah. Yeah. But again, this loan is 30 years, but the SBA portion, they provide the fixed rate all the way down. And if we based on the March's number, the fixed rate of the SBA 40% might be 6.25%. So people will think 6.25% fixed for 20, 25, or 30 years. Is it good? Nobody can tell. So it depends on what your preference. People will think, okay, then I have a fixed cost. Then I know how much I'm gonna pay, how much I can afford, or I cannot afford. But people say, oh, no, I want to, because the interest rate might be lower or I might be change it. Sooner or later, maybe 8 or 10 years later, I might be moved to a bigger warehouse or better location, etc. Yeah. So again, there's a tons of program there, and just depends on at the moment, what's your cash flow, your business trend, your expectation, and then you can ask your bank representative to see which way is best fit to you. Or any question up to here? Yeah. Okay. Eventually, SBA we just mentioned, kind of there's no loan fee whatever, unless the bank still want to charge the loan fee. Besides it, usually SBA we call it is a guarantee fee. Guarantee fee, and make it simple. Roughly, just what I'm saying is a 2.75% of your loan amount, not purchase amount, your loan amount. And then versus the conventional loan, it's kind of varies. Maybe if we have good relationship with this bank, then maybe just 0% or 0.5% or 1%. But normally you talk about 5 years, 7 years, it's 0.5% to 1%.
Right here.
Yes,
You mentioned that the loan is either a 5, 7, or 10-year, but
Yes.
it's amortized over 30 years.
Yes,
So is this considered like a balloon payment if they are not able to renew?
yes. So there's a balloon payment due in 5 or 7 or 10 years. Yeah. So at the moment, I would like to say this way. Usually, if your payment is agreed, and then your financial reporting is satisfaction, I don't think there's a bank will ask you to leave. So they will just renew the loan, because at the moment the principal is lower, the loan to value is high, is lower, and you have a good credit record in the bank here, so they would like to retain you. Yeah. So that's why I'm saying in this time, maybe there was a free loan fee, etc.
Thank you,
And
Mr.
at the moment, it's your decision. If you can get another loan with a better rate, then you can go to another bank. However, to go to another bank, your title has to be a new one, and depends on the FDIC regulation. Maybe you need to do a new appraisal. Maybe you can use the old one because there's no cash out portion. And again, depends on the bank's policy.
Stay behind to have more questions after the panels. You have a question now?
Yes. Yes.
And you said, a real estate, you can do real estate and you can do equipment.
Yes.
Can both item together with one SBA loan?
Good question. Yeah, I forgot to mention this. You don't have to put it together because different product, different program. Okay. For the machine, usually it depends on the residual life of the machine or usage life of the machine. There will might be 5 years amortized P&I, or 7 years or 10 years. Yeah. Okay. But again, there's a loan amount limit as an SBA program. For this company or this individual, the SBA loan maximum is 5 million. SBA loan is 5 million. So for example, you have a only used warehouse loan, already 4 million, the loan amount. Then you only have 1 million left. And this 1 million, you can buy another owner used warehouse. You can buy the machine equipment at the center. Yeah.
Thank you, Mr. Alex Wu. We
Yeah.
now have Mr. Eric Wu to speak about commercial loans.
My name is Eric Wu. Thank you for having me here. I'm the Chief Lending Officer of New Omni Bank. I work for New Omni Bank for almost 10 years. I'm going to talk about a little about a commercial real estate loan. The difference from the SBA and the commercial real estate is that the SBA primarily focus on the owner-occupied property, which means that Alex mentioned before that 51%. If the client looking for the investment property, like multifamily, industrial building, hotel, motel, or retail office building, that's what the commercial real estate coming to help the majority investor to obtain the loan. Usually, the bank looking for the property investment property cash flow, and also individual the sponsor the global cash flow. I mean, the global cash flow is that secondary source of a payment. That's what we are looking for. Also, we can provide the construction for the investment property, but not owner-occupied homeowner. Own up. Okay, so this is what we are commercial real estate coming from. The down payment will be different since now the owner-occupied. Usually the bank require 30% or more down payment. And loan fee will be vary. It depends on risk profile. Usually from the 0.5% to 1%. The loan term is based on a 25-year amortization. That's a balloon payment. Should do in 3, 5, or 7 years. It all depend the client investment need. For example, maybe the client need to shorten investment like 2 to 3 years, like flip. They're gonna sell the property, so maybe they only require 3 to 5 years. The maximum we can go is 7 years for the term. That's what usually the industrial standard for the commercial real estate. We can do up to 20 million for the in-house for the commercial real estate. Not like SBA, we kept at $5 million for the loan. So briefly, this is a commercial real estate about. Anybody have a question regarding the commercial real estate? I guess it's very straightforward. Yeah, go ahead. Yes, please.
And then you said, you will do a construction loan.
Yes.
So the construction loan is like how many percent for the owner occupied?
Usually construct, you talking about you build a warehouse for the owner occupied. Usually we're not going to down payment. We call it loan to cost ratio. How much the equity inject on the project, and also next within the loan to value. Usually will be 70% of loan to cost, which is including the land, the hard cost, and also financing cost. Okay, so total we looking for 70% loan to cost, and also loan to value, anywhere between 65% to 70% for loan to value. Yeah, hope that answer your question. Have any question? I guess that we're gonna turn to the Howard for the very interesting.
Thank you. Yes,
Yeah.
Mr. Howard Lee will talk to us about the HELOCs.
All right. Good morning, ladies and gentlemen. My name is Howard Lee. I've been I'm the director of consumer and retail lending for New Omni Bank. And as of last year, one of the new products that we rolled out was a HELOC. As most of you already know, HELOC stands for Home Equity Lines of Credit. Now, is there anybody that's not very familiar with HELOCs? Okay. Primarily in the industry, HELOCs a lot of times is reserved for owner-occupied properties, right? And also, they cannot be used for exotic property types such as 3 to 4 units, or investment properties that I spoke of. And a lot of times in the industry norms, HELOCs are generally smaller than first TD mortgages, right? Because of the federal regulations, a lot of lenders choose to keep their HELOCs at around 250,000 to help accommodate any qualifying issues that might be present. Now, I've gone over what the industry norms are, and now I'm going to give you a little intro into the program that we have. Our program can actually accommodate up to $5 million, okay? So compared to traditional HELOCs, they're a lot bigger. And the intent in that is because we realized there's a vast amount of in our Asian community that demand to use a HELOC product. As most of you know that if a borrower came from overseas, then when they're making an offer on a property, your listing agents, are they very often very concerned with how they're getting their assets over, right? And in this day and age, we do face a lot of that problem. It's not that our borrowers can't get the funds over, they just can't do it in a short notice. So a lot of times it takes longer preparation. Now, what our line of credit offers is once you purchase that product, a property, we give you a big line on there and you can further utilize that line to purchase additional properties, leaving the portion that you need to source from overseas a lot less. Okay. And the plus side about our HELOCs, it can accommodate single family residences, of course, condominiums, 2 to 4 units, right? Investment properties, second homes, and of course, owner occupied as well. We do have, in recent years, we see a lot of real estate activity in Orange County, right? And we have a vast amount of borrowers from Orange County that actually utilize our HELOC programs because them being very savvy investors, they're always on the lookout for an excellent opportunity. And with our program, we can accommodate any type of closing that you need, especially when it's a line of credit that's already been established. Now, another thing is we try to make our HELOC as painless as possible. Not to say that this is easier than the smaller traditional HELOCs, but we do consider foreign income. So if your borrower is a new immigrant and they cannot document any source of documentable income in the United States, a lot of times this bars them from the traditional home equity line of credit products. Whereas that's exactly the type of customers that we cater to. We can take into consideration your employment overseas, and we can take into consideration your assets overseas, and not just liquid assets. We can consider any retirement accounts. We can consider any stock holdings, even time deposits, a lot of things that traditional American credit underwriting wouldn't accept, but we do consider that. And the primary goal is because we realize that a lot of our borrowers are global, they're international. So they may not have their assets or liquidity in the US. So, going back to Irvine or Orange County area, we know that the real estate value is really high, right? And a lot of times even the $5 million loan amount cannot accommodate. Now, we do have another program, which is a adjustable rate mortgage that can similarly go up to another 5 million. So if you consider taking an ARM first TD at 5 million and taking another HELOC at 5 million, then your total financing is up to 10 million. And that's a lot of times when you're looking at properties in the range of 20 millions for those really affluent investors, this program comes in really handy. Yeah. Do I have any questions so far or? Correct. Yes. Our program is prime based and the rate is constant and floating. Meaning if the Fed lowers prime rate this month, starting from next month, you're going to see your interest rate drop already by whatever the Fed decided to drop by. Yeah. Yeah, I know a lot of people are anticipating March, right?
Yeah,
Yeah.
I want to know that, what is the term of the loan? Like,
Okay, here's a little bit different. As most of the HELOCs are, they're usually set on a 10-year draw, right? And afterwards, there's an amortization that occurs. With our global investor HELOC, we set the terms to be 5 years, right? The reasoning behind that, remember earlier I said this program can accommodate foreign borrowers, right? The original goal of these programs, our portfolio program, is to help new immigrants to get assimilated into the traditional credit, US credit market. Hence, as most of you know, as a brand new borrower from overseas, they have no credit history. They have no income documentation and their assets are overseas. And a lot of times this bars them from traditional credit facilities. And whereas we can accommodate. Now, at the end of the 5-year term, they can always choose to renew into a new line, or we have a plethora of other products that's designed to help them. Yeah. Like I said, when assimilate them into US credit markets, yes, we have Fannie and Freddie 30-year fix, adjustable rates, 15-year fix, any of those traditional programs that you know of. Yeah. We even have down payment assistance programs that they can consider. Loan to value right now, as of on this flyer, it says 65%. But I'll tell you a little bit of inside track because we have received quite a lot of applications, and for the year that since this product was launched, yeah, operationally we're at capacity. So we're doing a lot. There used to be a lot of goals for this product, like being take on a standalone second TD, offering as a wholesale product. We currently put that on hold because on average, we're doing at least 10 million on this product alone. So there's a lot more enhancements and developments that's currently put on the back burner, I would say, trying to focus on all the borrowers we have right now. Oh, typically our application and turnaround time takes about 3 weeks from submission to funding. But generally, I like to tell our clients, just think of it as a month, right? We have accommodated way shorter closing times, such as like 2.5 weeks-ish. But generally, because this product, we do ask for a full appraisal. So a lot of times the delays are not from us internally. For example, from time of submission, within 3 days, you'll get a conditional approval. So, and once we get that conditional approval, that's when we engage the appraisal. So if the appraiser is from a very busy area, they might take up to a week. So that adds to the closing time. It's not like we're waiting for them to come back. We're still doing our other works, but a lot of times things do hold us up.
SBA wise, just what I mentioned, it has to be the local people. There's 51% and more. Credit score, I do believe SBA will be wider. Yeah, maybe 600, something like that. There I cannot remember. Yeah, and if marginal, then you have a good expectation, explanation, then SBA might accept it. Yeah.
For the traditional CRE, the commercial real estate loan, for the foreign borrower, usually we are required a little bit heavier down payment, like 50 to 50%. Also, the investment property, the cash flow has to be greater than we call it debt coverage ratio, has to be more than 1.3. That's generally what we're looking for. Since it's a non-recourse loan for the foreigner, we usually require a little bit heavier down payment. Yeah, hope that answers your question.
Yeah. And adding, sorry,
go
sorry, are you talking about commercial or residential or?
Yes, we do reserve right to verify the tax return. US tax return, yes, US tax. They need to give us the very good personal finance statement. Yeah, they provide a liquidity of the overseas.
Going back to that earlier question regarding credit, on the consumer end for our foreign national clients, we do ask for what's called a non-traditional trade line. So this could be a utility bill that they pay overseas or something, or even a credit card statement showing they have borrowed and they have paid back. All these can be used as a non-traditional credit. Now, as for FICO score, of course, foreign nationals don't have credit scores. For domestic borrowers that's interested in this program, we generally ask for a 720. But we are looking to drop that a little bit. But when I say a little bit, at minimum, it's still going to ask for at least 700. Okay. And going to the gentleman's question about income verification. For consumer lending on the mortgage and HELOC side, for foreign incomes, we can look at a variety of documentations. If they have pay stubs and stuff like that, we can take those automatically. We don't need to ask for tax return when it's a salary borrower. We can also use, as many of you are probably familiar, a WVOE or written verification of employment form, or any sort similar. They can have what's called an employment letter issued by their company or their HR department, certifying what their position, their length of employment, their income level, and probability of continued employment. Now, we can take all types of these for salary borrowers. Now, for self-employed borrowers, we can rely on, of course, going back to tax returns. Even if it's a foreign tax return, we do have staffs in our office that's in charge of translating and conversion, currency conversions to help us interpret these documentations. Now, we can even go beyond that. We can accept a certified P&L prepared by a tax preparer, or in the least likely event, we can accept a self-prepared P&L by the business owner. Let's say the business is not a huge business where they have hired our accounting department to prepare their financials for them. If it's a owner-operated smaller business that's generating good income, we can use the P&Ls for those. And a typical, one example that comes to mind is we had a real estate investor from the Philippines, and that's what they used, their rental income, and also, of course, their capital gains from the purchase and sales of real estate properties overseas. See? Yeah. Does that answer your question? Yes?
Only Nevada and Arizona. Yeah, we not encourage because we not familiar with about if based on relationship, yes, we do. Based on relationship. I'm sorry, based on relationship, the bank relationship with the client. If existing client they want to expand the business, of course that we definitely consider to lending with other state. Usually we primarily focus on California only. No, we did not accept the new client for the other state. Yeah, thank you.
Okay. I'm getting a little jealous. You're always asking commercial questions, but I'm just kidding. But if I may add a little bit to what she had asked, the question was, do we consider foreign, outer state transactions? Sorry. Now with consumer lending, we can. Not on the portfolio product I just mentioned. However, there are other like bank statement or DSCR products that is applicable over outer state. But with our portfolio HELOC and adjustable rate mortgage is for for California only. Yeah. Oh, for self-employed people, we generally document 3 years and we take an average of that. Yeah. If the business is not in existence for more than 3 years, just however many years. And we may ask for previous income history. Yeah.
What about for reference SBA? What about who starting? Does he have a history? Usually SBA require 2 years. Yeah, but if again, if the cash flow wise, if your reporting in the past is not that good, but one thing is SBA they accept projection. So you can say after I purchase this property. Okay, after I purchase this equipment, my business is going to be how good in the next year, in the second years, and my cash flow, my net income will be reach this number to pay back SBA. Yeah, that's another good thing of the SBA. So they accept projections and yes, but of course the projection has to be reasonable. Yeah.
Great, Francis have 15 drawings for us. Did you all leave your credit card? I mean, your your business cards in the room. So now is the time to do it. And Thank you. Omni Bank have also provided lunch for us next door.
Right.